Welcome to the podcast about venture capital, where investors and founders alike can learn how VCs make decisions and reach conviction. Your host is Nick Moran, and this is The Full Ratchet.
Welcome back for another edition of Investor Stories. On this special segment, the experts describe the most important lesson that they've learned and how that has changed the way they invest. This is the special segment called Lessons Learned. On today's special segment, we have Monique Woodard of Cake Ventures. Monique, can you tell us a story highlighting a critical lesson that has changed the way you invest?
I think there is not a single story, but I think, I'm definitely a thesis-driven investor, and I have a point of view about the world. And I think that there were times where I missed I missed an interesting company because it didn't fit into the thesis, right? Or I invested in a company that did fit into the thesis, but was just not a great company, was not going to be a significantly sized opportunity. And so I think that the lesson in all of that is to have a point of view on the world, but, have some holes that people can come through, right? Because I think world changing and innovative companies don't always fit into your investment thesis, but the founders who are building these companies can come through in a myriad of ways. And so I think that it's taught me to just hold less tightly to a thesis.
On today's special segment, we have Spencer Maughan of Finisteer. Spencer, can you tell us a story highlighting a critical lesson that has changed the way you invest?
Sure. So I think, and I was having a coffee the other day with, mentor of mine, Ray Rothrock, who for many years was a managing partner at Venrock. An incredible investor, really sensible, but it's he's got this great sensibility at the same time being this massive optimist, which is often hard. I find if people are too sensible, they usually slide into cynicism or something. Anyway, we're talking about patience and the importance of patience in investing. And, there have been investments where, you're unsure about the company, whether that's technology or team or market or something, but they seem to be getting hot. Maybe another, named firm is investing and, you feel like, well, I haven't done anything in this space, or I haven't done a deal in a while, or whatever it might be. And you start to feel like, well, I need to be doing deals. Like that's an important part. And I remember one time, it wasn't an investment I did, but it was one I was working on with a team at another firm, but pulled the trigger early, and the company ended up doing okay. But it was just a really distinct lesson that some of the risks that we saw, we probably would have priced it differently, or just waited till the next round, or that sort of thing, to optimize where we saw the risk return sort of opportunity really was. And so I think, I said to Ray, one of the things I always think about is you're trying to take a right-hand turn out of somewhere, and there's a lot of traffic, and you're waiting and a gap comes by that was probably okay, but you don't take it. And then you're sitting there for another 5 minutes, and ultimately you just pull out an anti-gap, right? And you almost get rear-ended or something. And it's like investment can coax you into that. And I think it's just super important to be patient and look for what you're looking for.
That's a great lesson. On today's special segment, we have Paul Martino of Bullpen Capital. Paul, can you tell us a story highlighting a critical lesson that has changed the way you invest?
I think it goes back to what Matt Ocko taught me in the early days of the fund. When I was just starting the fund, and Matt continues to be one of my most important mentors in this business. He told me perversely that the deal that you most understood, the deal that you were the only one that you saw, the only one who saw the deal, meaning not saw it in terms of pitched it, the only one who saw why it would be big. He's like, you wait for that moment. When you're the only one who sees it, those are the deals you wait for your whole career. because it all lines up in your head, and go with it. Don't fight your instincts when you're the only one who truly understands a deal. Go with your conviction on that. Great advice. I really like that deal where I kind of got to go in the partner meeting and go, I know I'm the only one who gets this, and that's why I know we should do the deal.
Amazing that you're, trading notes with Matt Acco. I feel like their funds, the thesis, it almost couldn't be more different than Bullpen.
That's exactly right. And look, Matt was my first weekend in Silicon Valley as a kid still in grad school. I met Matt, and he said something to me like, we'll be friends for life. And we were. I mean, that's almost 30 years. He introduced me to this guy named Mark Pincus. He said to me, Paul, one day you and Mark Pincus will start a company together. Sure enough, we started Tribe together. So Matt has been my muse or my horse whisperer my whole career. So Matt and I are very, very close. And and while his fund couldn't be more different, big techs and hardcore science, a model similar to Lux, we'll invest in nuclear reactors and it might take $50 million.
Yeah.
But a lot about the instinctual aspect of the venture business is the same, no matter what your orientation is. And by the way, the funds that are purely data-driven, I think they miss the boat. Venture has got to have art and science in it. Mm-hmm. I remember one time an LP came to our office. Paul, you're analytic. Can you show me your computers that do the modeling? I'm like, yo, dude, it's Excel spreadsheets and guts. Like, no, I go see Chris Farmer. I think he built stuff like that. Maybe that works, but that's not what I did.
That's funny.
On today's special segment, we have Ben Casnocha of Village Global. Ben, can you tell us a story highlighting a critical lesson that has changed the way you invest?
The lesson that I keep coming back to is on how to properly evaluate the potential of a founder. So some of the best decisions I've made in my life and the worst decisions I've made in my life have had to do with talent evaluation, right? So when I started my first company, one of the worst decisions I made was who we hired at one point to come in and be CEO. Other parts of my life, personal and professional, some of the best decisions I've made have been who I've chosen to be friends with, to date, to bring into my life as family, and or to work with as colleagues. And so I'm always obsessed with people and how to hone my ability to understand the true quality and potential of a human being. And so with respect to investing, the question has always been, if you meet an extraordinary human being who seems unbelievably resilient, unbelievably talented, and passionate about a vision, but you think the idea is bad, and it's early days, do you make that founder bet, right? Do you just bet on the founder and their ability to push through walls or change their idea and iterate? And this has been a lesson that I have to continue to learn to some degree. I'm not even sure there's a specific direction that it points consistently, but just this tension between everyone knows team is important and it's all about founders and about the human being. But if it's an incredible human with an idea that you think is bad, do you pull the trigger? And we encounter that, from time to time.
Where do you land on that now?
So where I land on it, my nuanced view is that if I believe the idea is bad, but the founder is really talented, then I look to see how open-minded the founder is to changing the idea. And so if it's a founder that has this idea because it's the thing they've been thinking about for the last 15 years, it's totally wrapped up in their personal life story, it has to do with their 3 prior companies, then I say, you know what, the odds that this founder is going to change the idea are pretty low. Now, usually we see all those attributes as high quality features, right? Like, hey, they're scratching their own itch, they have great customer empathy, but if you don't like as a VC, if you don't like the idea and you're hearing all of those signs, the odds that they're going to pivot and change are pretty low. But if I meet an extraordinary founder and their V1 idea is sort of arrived at analytically, like, hey, I was, analyzing these markets and I've been cycling through different ideas and here's the idea I landed on, I'm more likely to make that founder bet because I have confidence that, hey, maybe they'll make it work. And if it's not working, within 6 months, they'll pivot and change their idea.
That will conclude this installment of Investor Stories. If you're enjoying the program and would like to see it continue, take a moment and leave a 5-star review in iTunes. Also, if you'd like updates on new content from TFR, as well as the top 10 VC articles every week, go to fullratchet.net and sign up for the newsletter. Okay, that will wrap things up for today. Until next time, over-prepare, choose carefully, and invest confidently. Thanks for joining me.